Hello learners, today we'll be looking at a question from 2010. Kamara Pharmacy had two departments, medicine and cosmetics. The following trial balance was extracted from the business books on 31 December 2009. So before we continue, please like, subscribe and hit the bell button to receive more updates on the video that I post. So we are given the following list of balances in form of a trial balance. Okay, so we have capital, drawings, furniture and fittings, provision for depreciation of furniture, creditors, purchases. Under the they are grouped. So we have the medicines and cosmetics. Then the debtors, we have stocks, and also stocks are also grouped. We have medicine, we have stock also for cosmetics. Commission on sales, advertising, wages and salaries, insurance, rent, general expenses, land and buildings, sales, medicine, cosmetics. So under the sales we also have, they are grouped. We also have sales for medicines and sales for cosmetics, cash at bank, and the final balances. The following information was also provided. Stock at 1st December 2009, which was grouped. Medicine had 16,350,000 kwacha, cosmetics 10,150,000 kwacha. All expenses and gains were shared between medicines and cosmetics departments in the ratio 3 to 2 respectively. 3 to 2 respectively. So this is the most important adjustment here that you must consider when dealing with the expenses and the gains under this question that you have been given. So each and every expense and gain which you find, you need to treat this ratio that you have been given. Depreciation was provided on furniture and fittings at 10% on cost. Wages and salaries outstanding on 31st December 2009 amounted to 1,100,000 kwacha. Insurance paid covered the period from 1st January 2009 to 1st March 2010. You are required to prepare the departmental trading account and the profit and loss account in columnar form, showing the gross profit or loss, in net profit or loss, each department for the year ended 1st December 2009. And question B, prepare the balance sheet as at 31st December 2009. So this is the question that you have been given. So this question is a little bit tough but simple if you break it down properly, especially for the expenses and the gains. So you need to be following carefully. If I'm a little bit fast, you can pause the video, copy and do the necessary things that you are supposed to do. So we start with the workings. The workings, we are going to group our workings into two. So we start with the expenses that we have. So the expenses, we are grouping them into two again. Medicine and cosmetics. There are two departments here, and the first question is asking us to prepare the trading profit and loss account according to departments, meaning that medicine will have its trading profit and loss account, and cosmetics will also have its trading profit and loss accounts according to the balances that we have already. They have been divided. So expenses, medicine is carrying a ratio of 3, cosmetics is carrying a ratio of 2. So adjustment number 2 is reading all expenses and gains were shared between medicines and cosmetics departments in the ratio 3 to 2 respectively. So the word respectively, meaning that the first one which has been mentioned carries the first number on the ratio, then the second one which has been mentioned carried the second number on the ratio. So meaning that medicine carries 3, cosmetics carries 2. So this is what we have done here. Medicine with a ratio 3, cosmetics with a ratio 2. Then we start with our first expense, commission on sales, from the rest of balances there. So commission on sales, we will divide it according to the ratio that we have been given. So to do with this one, we are going to involve a little bit of math, whereby we add the numbers, we add the ratios here, 3 plus 2 giving us 5. So meaning that to find the amount that will go under medicine, we are going to say 3 over 5 times the cost for commission that we have here. So commission on sales, that is 4,000. So we are going to say 3 over 5 to find for medicine, which is giving us 2,400,000 kwacha. So 2,400,000 kwacha, that is for medicine. If we do the same on cosmetics, 2 over 5 times 4 million kwacha, giving us 1,600,000 kwacha. That is how we work with these ratios. Then advertising we have 4,500,000 kwacha. If we do the same using the ratios that we have, 5 of advertising, which is giving us 2,700,000 kwacha for medicine. Then for cosmetics, 2 over 5 times 4,500,000 kwacha, giving us 1,800,000 kwacha. Wages and salaries. So wages and salaries, this one, wages and salaries, there is an amount in the list of balances, and there is also an amount in the workings. Adjustment number 4, wages and salaries outstanding on 31st December 2009 amounted to 1,100,000 kwacha. So an outstanding, we need to add it to the one that we have to come up with the total wages and salaries expense that we had this year. So when we add wages and salaries 31 or 30,900,000 kwacha, 1,100,000 kwacha, we are getting 32,000, if I'm not mistaken. Yes, 32 million kwacha. So if we divide the amount that we have found in ratios, for medicine we are finding 3 over 5 times the amount that we have for wages, we are finding 19,200,000 kwacha. That is the amount for medicine. Then 2 over 5 of wages and salaries actual amount, giving us 12,800,000 kwacha. Then also for insurance, there is an adjustment here. Insurance 1,500,000 kwacha. Then they are saying that insurance paid covered the period from 1st January 2009 to 31st March 2010. So this insurance that was paid covered part of 2009 and part of 2010. So the part which is corresponding to 2010 should be removed, because the tables that we are preparing is for 2009. We need to have the amount for 2009, not for 2010. So here we need to calculate the months that this insurance was paid to cover. So from January to March, the months which this insurance was supposed to cover is 15 months. Then in the year, the months that this insurance will cover is 12 months. So this insurance in our accounts here, what we are going to record is for 12 months, not for 15 months. So now to find the amount that will be recorded here for 12 months, so we say 12 months over the 15 months, the total months, meaning that the amount that we are going to find, 12 over 15, giving us 1,200,000 kwacha of insurance, is the amount that will be used, that will be recorded in the trading profit and loss account. So this is the same amount that we are going to divide in ratios, 1,200,000 kwacha. If we divide it in ratios, for medicine it is giving us 720,000 kwacha. For cosmetics it is giving us 480,000 kwacha. So take note of this one, very much important adjustment here. Then we have general expenses, 600,000 kwacha. We divide it in ratios. For medicine we are getting 3,780,000 kwacha. For cosmetics, if we divide 2 over 5 of the total general expenses we are getting 2,520,000 kwacha. Then depreciation of furniture and fittings. Depreciation of furniture and fittings. Depreciation was provided on furniture and fittings at 10% on cost. The first thing which we need to do here, we need to find the depreciation cost first. So the cost of furniture and fittings was 9 million kwacha. If we depreciate furniture and fittings on cost at 10%, we are going to have 900,000 kwacha. That is the depreciation which will be provided. So it's the statement number 2 is saying all expenses and gains should be divided in the ratio 3:2. So meaning that each and every expense you need to divide it. So 900,000 kwacha, if we divide it under medicine, 3/5 is giving us 540,000 kwacha. 2/5 is giving us 360,000 kwacha. So this is all under the expenses. Then on the incomes, there is one income that we have in this question, and that is rent. It is there, it is written as rent. So when you are doing final accounts, you should be careful of what you are doing. You should be observing each and everything, each and every entry the examiners have made for you. So if you check rent in the list of balances here, this is the trial balance which you have been given. Rent is placed on the credit side of the trial balance. When a transaction is placed on the credit side of the trial balance, that is a gain, that is an income. So meaning that the rent that we have here, it is not rent paid, but it was rent received. We received rent of 2,400,000 kwacha. So this one was an income. If you are to do the opposite, meaning that your final accounts, you would fail to balance your final accounts because you made an error. A simple error can cost you everything to go wrong. So be careful of whatever you are doing. Be careful of each and every entry you make. Each and every transaction, check it twice. So the rent that we have 2,400,000 kwacha. If we divide it in ratios, under medicine 3/5, it is giving us 1,440,000 kwacha. Then under cosmetics 2/5, it is giving us 960,000 kwacha. So this is all about the adjustments that we have here. This is all. Depreciation we have done, wages and salaries we have done, insurance we have done, and dividing the expenses and the incomes in the ratios we have done. So now we can go to writing information in the table. So the title, as the question said, write the trading profit and loss account in columns, meaning that you are going to prepare first for the column of medicine and another one for the column of cosmetics. So Kamara Pharmacy Medicine Department trading profit and loss account for the year ended 31st December 2009. So forgive me for not writing the title there. I made a little error there, but for you, you can correct it as I'm explaining. So we start with the sales. So since we are dealing with medicine, meaning that each and every entry that we enter in this table will involve medicine. Do not make an entry in this table for cosmetics because you're going to make your final accounts not to balance. So sales, the sales for medicine that we have here, it is 150,000 kwacha. So take note that 150 million kwacha. So take note that there I've written 150,000 kwacha, but if you check properly, that is 150 million kwacha because the zeros I've kept them at the top there to show that each and every number that I enter here, the zeros should have the zeros which are on top there. So this is done in accounts to reduce the writing, the part of writing, because if you write those many zeros, they might consume a lot of space. So this is done to reduce the space which you are using. So take note that on top there, those two my zeros, each number which you enter here should have meaning that that number has those two my zeros which are there. So the opening stock for medicines, it is 30 million kwacha, write it there. Then the purchases for medicine, that is 95,000 95,700,000 kwacha. There is no purchases returns, there is no any adjustment that can affect the purchases, so we just write it in the middle, then add it to the opening stock to give us 125,700,000 kwacha. We reduce by the closing stock that we have 16,350,000 kwacha, giving us 109,350,000 kwacha as our cost of goods sold. 150 million kwacha minus the cost of goods sold will give us 40,650,000 kwacha as our gross profit. So to our gross profit here, we will add our incomes that we have. So we only have one income here, and that is rent. Rent, the income we are entering here is the one that we calculated for medicine. So take note, each and every entry which we enter here is for medicine, not for cosmetics. If you make an error entering for cosmetics, that can ruin your final account. So the rent that we have entered here, 1,440,000 kwacha, we add it to the gross profit, which is giving us 42,090,000 kwacha as our net income. Then we reduce with the expenses that we have. Commission on sales, 2,400,000 kwacha. Advertising, 2,700,000 kwacha. Wages and salaries, 19,200,000 kwacha. Insurance, 720,000 kwacha. General expenses, 3,780,000 kwacha. Depreciation of furniture and fittings, 540,000 kwacha. So this is the goodness of writing the working, so that entering the details here would be easy for you. Just enter whatever you have calculated that side. So if we add, these are all the expenses that we have. If we add them, they are giving us 29,340,000 kwacha. Then we reduce this amount from the net income, giving us 12,750,000 kwacha as our net profit for medicine. So now we go to Kamala Pharmacy Cosmetics Department Trading Profit and Loss account for the year ended 31st December 2009. So in this table, we are also going to write transactions relating to cosmetics. The sales for cosmetics is 100 million, so 100 million kwacha. Then the opening stock, that is 10,500,000 kwacha. To the opening stock, we add the purchases, 70,100,000 kwacha. Also here, the purchases does not have any adjustment to make here, so just write it there directly. Then we add the two amounts, giving us 80,600,000 kwacha. We reduce the amount by the closing stock, 10,150,000 kwacha, giving us 70,450,000 kwacha as our cost of goods sold. So the cost of goods sold, we reduce it from the sales, which is giving us 29,550,000 kwacha as our gross profit. When we reach this part, we add the incomes to the gross profit, and here we also have one income, and that is rent received. So rent received, we get the income that was calculated under cosmetics, 960,000 kwacha. We add it there. Then if we add there, we are going to get 30,510,000 kwacha as our net income. Then we do the expenses. Commission on sales, we have 1,600,000 kwacha. Advertising, we have 1,800,000 kwacha. Wages and salaries, we have 12,800,000 kwacha. Insurance, we have 480,000 kwacha. General expenses, we have 2,520,000 kwacha. Depreciation of furniture and fittings, we have 360,000 kwacha. 360,000 kwacha, yeah. Okay. Then if we add the expenses, we are getting 19,560,000 kwacha as the total expenses. So 19,560,000 kwacha, we reduce it from 30,510,000 kwacha, giving us 10,950,000 kwacha as our net profit for cosmetics. So that is all under the cosmetics department. So like I said, the good part of doing the adjustments, it would be easy for you to enter the transactions in the tables, just be entering the amounts that you found there. So the workings also carries marks here, so you need to do your workings properly. If you are unable to do them on a separate paper, you can do the workings inside. You can be showing how you came up with the amount inside the tables. So now we go to the balance sheet. So the balance sheet will just be one table here. We'll enter both medicine and cosmetics departments in one table. So Kamara Pharmacy Medicines and Cosmetics Department balance sheet for the year ended 31st December 2009. So here we have the fixed assets, furniture and fittings, 9 million kwacha. Then the depreciation that was provided on furniture and fittings, the total depreciation, that was 2,700,000 kwacha. The total depreciation 2,700,000 kwacha. So we added the provision which was already there in the list of balances, 1,800,000 kwacha, and the depreciation that we calculated from our workings here. Depreciation was provided on furniture and fittings at 10% on cost. So we added 1,800,000 kwacha plus 900,000 that we calculated, giving us the amount which is here. So the net book value would be 6,300,000 kwacha. 3,600,000 kwacha. Okay. Under the same transaction here, we have under the same fixed assets, we have land and buildings, 55 million kwacha. So 55 million kwacha, you write it there. This one had no adjustment, so you just take it to that side. Just take it to that side. Okay. So the net book value here would be, if we add all the amounts which are on the net book value, we are getting 61,300 kwacha. That is the amount which we are going to add with the amount which will come when we subtract the current assets from the current liabilities. So we go to current assets, stock. So the stocks here, we have two. We have medicines. We have stock from medicine 16,350,000 kwacha, and stock from cosmetics 10,150,000 kwacha. So we write them there. Then we also have debtors here, 12,200,000 kwacha. So here we did not provide anything of depreciation, so we are not going to reduce anything from debtors. Then we have prepaid insurance. Like I said, a prepaid paid in advance is treated as a current asset to the business. To this business, it will be treated as a current asset. So make sure that you write the amount here, 300,000 kwacha. So if we add the current assets that we have, they're giving us 44 million kwacha. Less current liabilities, we have creditors 8,500,000 kwacha. So here we also add wages and salaries outstanding. And outstanding, accrued, not paid, those are liabilities. They are current liabilities. They need to be placed here. So wages and salaries outstanding, 1,100,000 kwacha, we add it to the creditors, which will give us 9,600,000 kwacha. We reduce this amount from the current assets, 44 million kwacha, which is giving us 34,400,000 kwacha. For the 34,400,000 kwacha, which is called our working capital, we add it to the amount that we calculated as our net book value for the fixed assets, 61,000 61,300,000 kwacha, giving us 95,700,000 kwacha as our net assets, as our balancing figure. So you underline this amount. Financed by, the business was financed by the capital 90 million kwacha. Add net profits from the medicines department, net profit from the cosmetics department. So if we add the three amounts together, we are getting 113,700,000 kwacha. So this amount will reduce by the drawings that we have 18 million kwacha, which will give us 95,700,000 kwacha as our capital employed, which makes our balance sheet to balance, making the final accounts that we have done here, we have done them clearly and properly. It has balanced. So this is how this question was supposed to be answered. So if I was a little bit fast, you can just be pausing the video, or you can go back and redo the video and pausing where you're not understanding, or where I was fast. So thank you for watching.